Throughout our real estate class, we will talk about several math topics. Now, I do want you to understand that this is a real estate exam with some math. It's not a math exam with some real estate. So what you have to do in some cases, if you struggle with math, sometimes you may have to pick your poison. The first ones we're going to start off with are very, very simple concepts. Now, they may not always seem that way depending on what your math skills are. But on these first ones, you're not necessarily going to get points by knowing this. We're going to expect you to be able to understand this topic so that you can answer a much more complicated question. So our first math skill that we're going to talk about has to do with your real property taxes. On your real property, you are taxed on a local basis, and you're taxed on what we call an ad valorem basis. Ad valorem just simply means according to the value. Well, remember from lecture, when we talk about according to the value, we're talking about according to the assessed value. Don't worry so much about the appraised value or the market value or the sale price. Your real property taxes are based on your assessed value. And the formula for your real property taxes, for your ad valorem property taxes, are simply this. AV, which stands for assessed value, divided by 100 times your tax rate will tell you your annual taxes. Your annual taxes. Okay? That is your working formula. If you memorize this, then it's just a matter of plugging things into place. For example, now I'm making all this up as you go. I will give you some practice problems so that you can try this as well. But a very simple version of this would be to say this. Your property has an assessed value of $120,000 with a tax rate of $1.20. Okay? So let's look at that problem. The assessed value was $120,000, which in this case was a given. We are going to take and we're going to divide that by 100 because that's what the formula says. 120,000 divided by 100 is going to be 1,200. And then remember, I suggested to you that your tax rate was $1.20 per 100. So we're just going to plug that in times the tax rate, $1.20. Okay? You multiply these together, that's what the formula says, and you will find that $1,200 times $1.20 is going to be $1,440 is your annual taxes. So if the question is simply, what are your annual taxes if your assessed value is $120,000 and your tax rate is $1.20, the answer is $1,440. Now, not complicated. If I wanted to complicate it one step, I would ask you this question. Many buyers, homeowners, actually own their property and they borrowed money from the bank to pay for this. And their loan is considered what we call a budget mortgage, a mortgage that includes not only your mortgage payment, but also your taxes and insurance. So when we're talking about your TI, your taxes and insurance, the taxes that we're talking about are these taxes. So there is one more step here. If the question were to say, what is your monthly tax escrow for taxes, then in case you would just simply divide that number by 12. If they're $1,440 for the year and you wanted to make regular payments every month, that ultimately equaled $1,440. $1,440 divided by 12. $1,440 divided by 12 would mean that your monthly escrow would be $120. Okay? Makes sense so far? So that's simply the putting the formula into play and telling you a couple of questions that might be asked. First question was, what were your annual taxes? If a question was, what would your monthly tax escrow be in this particular situation? That's the second part of that. Okay? Now, let me ramp this up one step. Okay? Let me erase what's on the board here. Thank you. It's very possible that a test question may say something like this. The assessed value for your property is $100,000 for the improvements, which would include your house and your barns and stuff like that. $100,000 for your improvements and $40,000 for your land. This is good news for you. The fact of the matter is land and improvements for real property tax purposes are taxed at the same rate. So would it be okay to simply add these together? And of course the answer is yes. Now look where we are. We're right where we were on the previous problem. Your assessed value for land and improvements is $140,000. Follow your formula, divided by 100. Okay? Now let's talk about your tax rate. Your tax rate, depending on where you live, could be made of different numbers. For example, I live in the city limits of Holly Springs. So it's possible that I'm paying not only a county tax bill, everybody pays a county tax bill, but because I live in the city limits, I pay a city tax bill as well. So in this particular case, let's suggest that the county taxes are 67 cents per 100. So your county taxes are 67 cents, your county tax rate, 67 cents per 100. And then your city tax rate is 33 cents. Your city tax rate is 33 cents per 100. 67 cents plus 33 cents is going to be $1. And now we're right back where we were on the last problem. So this problem all of a sudden becomes $140,000 divided by 100 is clearly $1,400. And then times $1, that being your tax rate, and then your taxes for the year would be $1,400. Okay? What did we add in that particular case? I just simply told you, if you have land and improvement separately, it's okay. Add them together. That's fine. If you have city and county separately, add them together. That's fine. And that's the way we can ramp that question up. Remember, this is not a question on the exam that you're going to get a point for. This is what we anticipate you to know so that you can answer a more difficult question that's coming up a little bit later in later chapters. Okay? And then finally, let me mention one last thing in regards to taxes. In North Carolina, on the 4th year of an 8-year octennial appraisal cycle, there's what is known as a potential for a horizontal adjustment. In a horizontal adjustment, what happens is the county reaches out across to everyone's value and says, your value has gone up by 20%. Now, I made up 20%. I'm just doing it for instruction purposes. It could be 5%, it could be 10 or whatever. In our example, we are going to use 20%. So understand what happened. Property values in this area are going up. The county didn't want to wait till the 8th year for the revaluation, so they just simply said that everybody's property went up by 20%. Well, in this particular case, what you would want to do is take the assessed value. So let's give it a shot. Let's say the assessed value of the property in our original problem was $120,000. All right? Horizontal adjustment occurs, and we end up having a 20% increase. Well, a 20% increase could be reflected like this. I could take the $120,000. Now, depending on your math skills, you may take and multiply 120,000 times 20%. You would find that was 24,000. And add it to this number. I would like it if you would get more comfortable with the idea that if you're adding 20% to something, what you could simply do is multiply that number by 120%. In other words, you have to make your 100% back before you can add 20 to it. This will help you at some later point in the class. So 120,000 times 120%, which would be reflected by the 20% upwards horizontal adjustment, means that your new assessed value is $144,000. That's really the only step that I wanted to add, because at that point we're right back where we were earlier, correct? Your new assessed value is $144,000 divided by 100, and then let's assume your tax rate, if you don't mind, I'm going to use $1 just to make it simple here, is $1. Then your taxes for the year would be $1,440. Okay? And again, I will give you some of these to practice at home just to make sure that you're solid on this. This is not going to be a point on the exam. It will be practicing to get a later point on the exam. Ad valorem taxes, your real property taxes.